So the financial piece of having care and support is obviously pretty major consideration for most people and their families when making these kind of decisions. And unfortunately, the government only really steps in when people are right out of their resources. In terms of funding it, then an equity release in terms of house is likely to be a good way to do it if a large amount of funds are required. That whole sector has improved massively over the past few years and is actually a really good solution in most cases. It can be combined with what's called a care annuity, and that kind of ensures that there's enough money in place to pay for things. In terms of the choice of how you spend the money, a lot of people hold off and then wait until they have to go into a care home. And they get to the end, and then suddenly they're spending quite easily $1,500, $2,000 on living in a care home and not necessarily having a particularly good quality of life. There's some great care homes, I don't want to disparage the whole thing, but in general, the quality of life is not particularly good. And the average life expectancy once you move into care is about 3 years. So that can easily be several £100,000 required to fund that. And what I would generally say is you can spend an awful lot less in supporting someone to stay at home. And if they have a low level of support, that can often prevent any kind of need to move into a care home at all. And because you have a relationship with a provider that's much more flexible, you can ramp up support as and when it's needed and enable someone not to move into a home. And it all comes back round to this taking action early bit that really does make a massive difference to the kind of long-term outcomes for people. I'm Chris, I'm the founder and CEO of Thrive Homecare, and if you are at all worried about yourself or your parents or your loved one and their quality of life, then please get in touch. We'll have a no obligation chat and you can get an idea of your options.